Thank you so much. As she said, I'm here to present TAG, and I'm sure a lot of you maybe not have heard of us before, since we are a Canadian company and just recently entered into Australia. The disclaimer. So, as I said, TAG is a Canadian company. We're listed on a TSX. We have headquarters in in Vancouver, and a technical office in New Plymouth. Our main focus is on New Zealand and Australia. We have a high working interest of 100% in most of our assets, and some of our blocks we have 70% working interest. We own all our infrastructure and operate all our facilities ourselves. Some of the key figures of TAG: we have $4.5 million in cash. All our work program going forward is cash flow funded. We have a $10 million credit facility available to us. We haven't drawn from it yet. We have 4.1 million BOEs in 2P reserves. This has just a shy of 100 million Canadian in NPV value. And that's reflected not in our market cap, which is about 34 million today. Our production is around 1,300 to 1,400 barrels BOEs a day, and we have pretty high operating netbacks of about $44 per barrel in the last quarter. And as I said, we operate in New Zealand and Australia, which are both fiscally attractive countries to be in. So some of our experienced leadership team here. We have Toby Pierce, who is our CEO. He is a geologist by background, has an MBA, has worked in the M&A and capital markets in Canada and in London before joining TAG. Myself is a reservoir engineer and petroleum engineer by background. Max Murray is our country manager, has a lot of experience in facilities. Barry McNeil, our CFO, has been in the oil and gas and mining industry for over 20 years. Keith Hill is the current CEO of Africa Oil and has over 30 years in leading oil and gas companies. Dave Bennett, old veteran in New Zealand and Australia, knows everything. Brad Holland is a facilities engineer. Ken Vidland is an entrepreneur and has over 20 years of board experience, and we also have Peter Loretto that joined us not too long ago. So I talked a bit about our production. You can see here that we have stemmed the production decline, and we've done that by introducing water flood and doing workovers. The water flood started in 2016, and we now see a good response at our GLE pool on it, and we have indications that it's going to work on the A and B as well. And what I haven't put up here is what our current production is, sitting at 1,400 barrels. It's a lot closer up here. So we're on an increase, and with the coming work program that we have, we're going to do more workovers and see still an increase in production. I also mentioned that I had strong operating netbacks. Even through the whole downturn here, we had fairly okay netbacks, and we've been, and as I said, $44 in the last quarter. Here we had $26. That's only because we had some OPEX workovers that I had to do. So on to our main assets in onshore New Zealand, which is called Cheel. You have Cheel A sitting there, which is our main production station. We have Cheel E production station here connected by pipeline. We also have pipeline to Cheel B and Cheel C. And as I said, we own our infrastructure 100% there, so it's easy to monetize any discovery we will make there. We're working on doing some more workovers. We have most of our wells are only producing from one zone called the Mott Messenger Formation, and we're going to move uphole and perforate the upper Uranui zone as well, and we can produce from both of those zones together. This will lead to an increase in production, and these workovers are coming up now in this financial year. We have just shy of 40 wells drilled into the Cheel block. We have 3D seismic covering the whole block. We're going back now to see if we can squeeze more out of the seismic and on the logs. So we're going to do some seismic QI to see if we can better define the infill targets that we have already mapped out and the exploration targets that we could drill from the existing production pads. So they will be very easy to monetize if they come in. I've been on this water flood here, and I want to show you why we're so excited by the water flood. This is a production injection pair. You can see production was fairly steep here with A3X before the water flood came in. And we started water flooding with this red line here. And as the graph showed, production increased for quite some time. Even though we have decline that started to come down now, it's a lot less decline than we had seen initially. So we started this field-wide water flood in all of 3 pools in 2016. I mentioned that we've already seen a good response of production increase and pressure increase in Chile. We have seen the slight increase in production in Chile, and there will be another sort of 6 to 9 months before we expect to see an increase in production in GLB. So we're doing this water flood to increase production, increase the recovery factor, which means that you will increase reserves. So underneath Chile, you have a deep gas discovery called Cardiff. We have a pipeline already connected to the pad to the Chile production facility. Cardiff 3 that we tested here in 16-17 was actually drilled in 2014. There was a lot of difficulties drilling these wells, and they had been shut in. But the testing we have done on it, we got very encouraging results. We got the gas back to surface, we got the condensate back to surface. That made us to go to the next steps in trying to unlock this potential. And also to the southwest, wrong way, down here, you have a giant gas field called Capuni, which has produced 1.4 TCFs today and 65 million barrels of condensate, so it's a great analogy to us. Moving a bit further north from our Chile facility, you have the Sidewinder production station and the Waitariki exploration block. At Sidewinder, we own the facilities there at 100% as well. During the downturn, we went back and looked at logs. We identified some missed pay, perforated, added gas lift, basically turned this from a pure gas field to an oil and gas producer, and got 200 to 300 barrels of oil out of it as well, which is a great success. And also, as mentioned, the Supplejack 1 that we tested in November. I'm going to talk to that on the next slide here. So Supplejack 1 was actually drilled by the previous operator of this block in 2005. They looked for a deeper gas target that didn't come in. When we got the block awarded to us, we also looked at the logs and identified uphole pay. Went to perforate that. We tested over 7 million cubic feet per day from the well. We have now shut the well in, and we have applied for a production permit over it, which I hope to have in hand in a month or 2. And then we'll probably see first gas here in Q2, Q3 of the next year. And depending on which development solution we go for, we'll probably see somewhere around 2 to 4 million cubic feet a day of production. So moving east to our Puca license. This is Chile. So the Puca license we bought in 2016 for $250,000. Had about 100 barrels a day of shut-in production due to economic and technical reasons. Since then, we have drilled an exploration well, and we have tested over 270 BOEs a day from that well. Most of that is oil. We've applied for an appraisal extension, which will give us another 4 years on this permit, and then during this 4 years, I hope to convert this to a production permit and put those 3 wells on production. We also have a lot of exploration opportunities that we can see in this field. So on to Australia. So we picked up and bought PL17 in early 2019. We see this as a stepping stone for TAG to come into the Australian market and to Queensland and possibly further on as we're looking to grow. But so far we have acquired PL17. It's on the eastern Surat, just south of Origin's Iron Bark and CSG prospect. We are producing about 20 barrels a day from the two wells. They've been on production since sort of the mid-60s. We shot 3D covering most of the permit. We have done the initial interpretation on it, but we need to do a bit more enhanced seismic interpretation to better see the sands that we're producing from these two wells, and to place a third producer in there. So why would you choose TAG? I think we have an experienced, I know why we have an experienced drilling team, operations team, management, and production. We have a long life production with potential resource upside in terms of exploration, and then Cardiff, which is very big for us. We have high netback production. We have a strong balance sheet, no debt, and a credit facility of $10 million US available to us that's not drawn on. We have high working interest in operating all our assets, which leaves us with a high margin on production. And with that, thank you, and please come see me if you have any questions.